Good afternoon, everybody. Happy Friday from sunny Gloucester. Long weekend in store, and the weather looks absolutely beautiful. 36 degrees expected on Sunday. And again, another very choppy week in Australian equity markets and global equity markets. During the week, we were very busy. We moved office to Milsons Point, address you can see here, 402/6A Glen Street. Feel free to pop on in at any stage. Visitors are definitely welcome. Let's hop straight into the 5 biggest developments for the week. First, Australia's CPI year on year rose 5.2%. This rose from the previous reading of 4.9%. This was in line with market expectations. The main thing and key contributor there was petroleum prices really standing out. That was the key driver. It's going to be very interesting to see how the RBA handles this somewhat increase in CPI and see how they adjust their outlook statements. One interesting thing that has happened over the course of the week with that new CPI figure was that we also saw 3-year and 10-year Aussie bonds also sell off, so it meant the real yields rose over the course of the week quite a lot. Spanish CPI, flash CPI year on year surged 3.5% for September. This is a significant rise from the previous reading of 2.6%. Once again, power and energy and petroleum prices were the key driver. Number 3, German IFO business climate fell to 85.7 in September. This was up or relatively flat. 85.8 was the revised figure in August. There has been a little bit of an alleviation here, or a deterioration in this data, and it's just partly due to the revelations that Germany was making a backdoor arrangement to buy cheaper oil from Russia, or Russian gas, in the summer, and hopefully the deal is expected to shield it from a worsening energy crisis. But ultimately, there is a lot of uncertainty in the European economy, and Germany, even though it is such a large economy, is not able to avoid this. US consumer confidence fell to 103 in September. The upwardly revised figure in August was 108.7, so you can see consumer confidence is starting to wane. Again, interestingly, a major cause of this is because recently there's been numerous strikes going on over in the US, especially in the motor vehicle industry, and because they have a big component of the vote, because this is a consumer-led confidence survey, they have felt more pessimistic just in general because of this. Again, rising prices. This has been a very common theme for some time. Rising prices in petroleum and just generally inflation have meant households have become less confident about the future. And then finally, US GDP quarter on quarter grew 2.1%. And this was sort of the same pace that it was in the first quarter of this year. It did show relative strength and resilience, and this is in the face of much higher interest rates. So again, as interest rates stay at high levels for a longer period of time, it'll be interesting to see how GDP results because of these high interest rates. You can see here the 1-week performance of numerous futures markets. You've had lumber and oats because of weather conditions and growing conditions. They have gone on a bit of a rally because of expected undersupply. On the other end, soybean oil and coffee in particular. Coffee has been on an absolute tear this year, so there has been a little bit of profit taking. The VIX had a relatively muted week, and you can see that the Russell 2000, the NASDAQ, and the S&P 500 all had relatively mixed weeks as well. You saw gold and silver over the course of the week have a fair bit of volatility as well. That part of the market, our multi-strat hedge fund has been short gold and silver more recently. Here for the Australian share market, you can see that for businesses, ASX top 200 market cap in excess of 10 billion. You can see that CBA NAB Westpac, Macquarie all had relatively poor weeks. ANZ, QBE were really the only bright spots within the financial sector. Rio, Newcrest, Mineral Resources, and BHP, again, were all very weak. Fortescue looks like it has experienced a little bit of a rebound over the course of the week after experiencing 2 or 3 weeks of pretty horrendous price action. The only real bright spot, energies, Santos and Origin had very good weeks. Santos up 4% odd. That's being assisted by good moves in the crude price. And then ResMed was up about 10% as well. But outside of that, CSL, Cochlear, Westies, Woolies all experienced just broad selling. And normally, you know, this is one thing that we will always notice going into end of month and also end of quarter. A lot of large institutions will start to reposition their portfolios for the upcoming quarter, depending on which businesses are being added or subtracted out of different ETFs. So we are seeing some pretty wide movements happening here at the moment in the ASX top 200. Outside of that, the trend barometer, you see recently there's been a lot of short and long-term trends all becoming more consistent. Over the last week, we have had an elevated level for both long and short-term signals. Around about 30% at one stage of both universes were both hitting through short and medium-term, short-term and long-term highs, which is very interesting. Which just demonstrates there are some markets, like bond markets, have all been hitting very, very significant levels recently. Other than that, hope everybody has a very nice long weekend for the final quarter of the year. Thanks a lot. Speak to you soon.